Hey guys, in this video we'll be talking about how we can start investing with just 100 rupees. Even with just 100 rupees, you can start your investment journey. But later on, when you have the excess amount, you can keep on adding those to your investments. So when we have decided that we will start with an SIP, 100 rupees, it is important to start investment as early as possible. So these investments which we'll be doing it in mutual funds. In mutual funds, we'll be doing an SIP. It is nothing but systematic investment plan. What is an SIP? In an SIP, you will be assigning an amount. For now, let's assume it as 100 rupees and you will assign it a day where that money has to be deducted every month or every week. So if you want it to be deducted on every month of 10th, so 100 rupees on 10th every month it will be deducted. In the name itself it is there, systematic investment plan. In a systematical way, the amount will be getting to be invested. Now we have decided that we will be doing investing in mutual funds through SIP. Now if we see what are the available plans or mutual funds which we have in which we can able to make investments. Overall in the mutual fund industry, we have around 1350 to 1400 mutual fund schemes. So in that we would require only one or two schemes for us to make investment. So if we look at these many options, the first thing we get confused. So for which I have already selected few mutual fund schemes in which you can directly put the money. So I have selected Nifty index funds in which you have three options. One is HDFC Nifty 50 index fund, Nippon India Nifty 50 index fund, ICICI Prudential Nifty 50 index funds. In these three, whichever you can select and do the investment. All three are good. And the scheme which we are selecting is an index fund. So whatever the average return of mutual funds will be there, similar kind of return we can expect in this. So how to start the investment journey? For which you have to open a Demat account in any of the broker. It could be Angel One, Zerodha, Stocks, Grow. These are just a few examples. You can open in any of the Demat accounts. So once you open the Demat account, in the search option, you can search any of these three mutual funds. Once any mutual fund scheme is selected, you have to select the duration. For how many years you would like to do the SIP. For everyone, I would suggest that you start with minimum of 5 years, but try continuing as much years as possible. More than 5 years, or if it is possible, you can continue that SIP for 15-20 years. And starting early is very much important. And you can select whether this amount has to be deducted weekly or monthly. If in case it is weekly, then you have to select days, Monday, Tuesday, Wednesday. In all these days, which day the SIP has to be deducted. So on the specific day which you will be giving, on those days it will be deducted. In case it is monthly, then you have to select the date. In weekly, you have to select weekdays. Then all these are selected. Then you can proceed with continue. A request will be went to your bank account. Once it is verified, the amount will be deducted automatically. This SIP of 100 rupees is not our goal. This 100 rupees is just to form a habit of saving. So later on, we will be increasing this amount. You can increase it to 500. You can increase it to 1000 rupees. For starting months, we need to form a habit. So now, let's see after few years of you doing the investments, how much would have been your money grown. So we'll take two examples. A person doing 500 rupees SIP and the person doing 1000 rupees SIP. The person doing 500 rupees SIP for 10 years, he might get around 1,12,000. And the person who is doing 1000 rupees SIP for 10 years, he might be getting around 2.24 lakh, 2,24,000. And the same person, what if he has done for 20 years of investment? If a person has done 500 rupees SIP for 20 years, he could have got 4.59 lakh, 4,59,000. And if the same person has done the 1000 rupees SIP for 20 years, he would have gotten around 9.19 lakh, 9,19,000. So if we compare the differences, the person who is doing 500 rupees SIP for 10 years and 20 years, for 10 years he has made 1.12 lakh, and for 20 years he has made 1.59 lakh. The year is doubled from 10 years to 20 years, but investment is more than doubled. That is the power of time. The same we take example for the person who is doing 1000 rupees SIP for 10 years. His investment would be 2.24 lakh. he would get around 2.24 lakh. And the same person, if he has done 20 years of SIP, he would have got 9.19 lakh. Even in this situation, the year is doubled from 10 years to 20 years, but his investment is more than doubled. Here also the power of time applies. The earlier you start and the longer you do the investment, you can grow your money much more. Now you have understood why do you start investment and do the SIPs. Now let's understand what is the risks in mutual funds. So the scheme which we have selected, or any schemes which is related to stock market or stocks, mutual funds, all carries a certain risk. The risk is called as market risk. We'll take an example. Now let's understand the risks in mutual funds. Any mutual funds which is related to stock market will have a certain kind of risk. That is called market risk. So let's assume that you had started the investment at the worst case scenario. We'll take the worst case scenario before the corona crash. Before the corona crash, the market was around 12,400. And let's assume that you had started the investment there, and within few months, the market has fallen to 7,500. That is around 35% drop. And you continue to do the investments. This crash was happened in 2020. And now it is 2026. Now if we take a look of what is Nifty now, the Nifty is now at 23,400. Where is 12,400? Where is 23,400? In these 5 years, with the highest investment at the market top, even then you would have got around 90% return from the market. And if you had invested at the time of market crash, then you would have gotten around 200% return. So we have to think these investments as gold. We don't buy gold when it is at the highest rate. And even if you buy at that rate, the second time when we go to purchase, we'll wait for the gold price to come down. We'll wait for that discount in that market. The same way we have to look here. Whenever the market has fallen, we should not assume that the market will crash and this is the end of the world. We should always look these market corrections as a discount we are getting. So when you stick to more than 5 years time frame, at that time all this market volatility looks very minimal. Now as I said, you can start the investment with 100 rupees and later on, but always try to increase the SIP amount. Do some less spending and do the more investment. Now sometimes you'll be having an additional savings. You would have got that money somewhere else. So you think of doing that investments in mutual fund. You can do those investments. The transaction is called as lump sum. So let's assume that you had selected HDFC Nifty 50 index funds in which you want to do the investment. And already the SIP is going on. It started with 100 rupees and you later on tried increasing it to 500 rupees. So now currently 500 rupees SIP is going on. Now assume that you have 10,000 extra savings which you want to think of doing an investment. Now you can put this 10,000 in the same scheme. The transaction name will be lump sum, additional investments in this existing scheme. This is how whenever you have spare cash, do that money also as an investment. Let your money grow. You do not work for money, let the money work for you. Some major questions will be there about mutual funds. Let's try to discuss those. I've told what is an SIP, what is a lump sum. SIP is when you assign a fixed amount and fixed date. In those dates, whenever the amount will be deducted, it is called as SIP. And whenever you have an existing extra cash and you do the investments, one-time investments. It's not like every month you will be getting that same amount. It could be like you have got a bonus and you want to do that investment. It's a one-time transaction. Those one-time transactions is called as lump sum. Some people will ask, is mutual fund safe? Mutual funds are very safe because this is looked after by SEBI. So rules and regulations are very strict in this. The chances of happening any kind of fraud is very less. So you can definitely go for mutual funds. Can I lose money in mutual funds? Yes, you can lose money in mutual funds through market corrections. Whenever the market falls, you can lose the money. But our aim is we are sticking to 5 years plus investment period. So at this 5 years or more, this market correction will not affect any. How long should I invest? As I said, 5+ years. Do I need to pay tax on mutual funds? Yes, you have to pay tax. If you are withdrawing less than 1 year, then it is 20%. If you are withdrawing after 1 year, it's 12.5%. This is the tax that needs to be paid on the profit which you are getting. If you are withdraw it in a loss, then you don't have to pay any taxes. Profits will be taxed on your profits. Capital gains will be taxed on your profits. when is the best time to invest in stock market? The best time is now. The best time was 5 years before. So next best time is doing as early as possible. And second best time is whenever a market has crashed. Next question is, can I withdraw my money from mutual fund? Yes, you can withdraw your money from mutual funds. You can withdraw the money within 1 year or greater than 1 year. So if you withdraw money less than a year doing the investment, then you have to pay 1% as charges. If you're withdrawing after 1 year, then you don't have to pay these charges. Next question is, can I do the investments whichever extra money I have in the middle? You can do those additional investments. If you have gotten bonus, extra savings you have, or you have got any increments, all those things you can do with. You can increase the SIP amount, or you can do the lump sum investments. Now, things to be remembered. In mutual funds, you're starting the journey. All the best for you guys. So let's see the things to be remembered. First, always start early. As early is better. Second is, start saving as much as possible and do the investment. Third, try increasing your SIP amount. When you cut down your unwanted expenses, at that time you will be having extra cash. Those cash you can increase the SIP amount. Fourth, add extra unused money for growth. Some money will be there which you think is of no use for long-term purpose for more than 3 years, 5 years. Those money you can put it in mutual fund, additional monies or unused money. Fifth, do not do unwanted expenses. The starting years of our career or whichever is decided on how much money you can able to save for your 30s. So when you're in 20s, try to spend less as possible. Sixth, building wealth takes time. Started investments in your 20s, you would have good amount of money in your 30s, middle of 30s, 30, 35. Those are the time you will be having good amount of money. But if you already start late by 25, 30, 35, then you can't expect much, because you will already be old aged around 50, 55. At that time, even if you save, what you will do? You should have energy to use those savings also. Even if you want to travel the world, it is not possible at those age. But you can do the traveling at 30, 35 age. So it's better you start the investments in your 20s, early 20s. Seventh, try to stick with SIP for minimum for 5 years. Make a standard goal that you will stick with SIP, whatever the amount you are selecting, and you will be continuing that SIP for 5 years. I'm not talking about 100 rupees. You can even now you can start with 100 rupees, but with this 100 rupees, the amount is grown, is not much. Even in terms of 1000 rupees, thousands of rupees, that will be very low. So later on, whenever your salary goes up, or cut down the expenses and increase the SIP to 500 or 1000. Eighth, very important habit, save first, then spend the remaining money. If you are getting 15,000 salary, in that if you have decided you will do 1000 SIP, cut off this 1000 at the starting itself, as soon as you get the salary, and assume that you have gotten only 14,000 salary, and try to live with those. This one thinking and habit alone is very important. Start your mutual fund journey. All the best. That's it for today.